our other favorite moderator, Anson Bailey from KPMG. Come on up, Anson. He's going to be speaking with Jason Fang of Sora Ventures, which is a really, really innovative venture capital firm backed by crypto, believe it or not. And also our hotshot from Pantera Capital, Paul Veradittakit. Please come up and join the stage with Anson.
Thanks, Rebecca. Thank you very much. Rebecca, I have to say I was somewhat disappointed when you referred to Napoleon Biggs as your favorite moderator. In fact, it hurt me a lot.
But Anson, I just said you were my other favorite
Okay,
moderator.
but it still hurt me, Rebecca. It still hurt me. Anyway, great. Jason, Paul, how you doing? Ladies and gentlemen, I just want to say Napoleon and I are from a bygone era. We're very old. I look probably a little bit older than Napoleon, but I too used to have a lot of hair. I've taken my tie off just now to try and emulate, of course, my good friend Napoleon Biggs. But obviously, sitting next to Paul and Jason, I'm feeling even older. So, gentlemen, great to see you. Napoleon gave his panel, distinguished panel members, gave them like 10 seconds. That was a bit go on. That was a bit mean. I'm going to give you longer. Paul, if you don't mind, I'm going to give you perhaps a 1-minute elevator pitch or 30 seconds to tell us a little bit about what you're doing. Thank you.
Thank you very much. Pantera Capital is an institutional investor that invests in just cryptocurrencies and blockchain. The way that we think about it is there's many different ways and strategies that you can do that. Well, we separate each of our strategies into its own fund. So we have a private ETF Bitcoin fund. We have a venture capital fund that invests into equity or non-liquid investments. We have an ICO fund that invests into pre-sales, and then we also have a quant fund that actively trades into cryptocurrencies that are on the secondary market. You know, our firm was started by Dan Moorhead, so we have sort of a financial institution, traditional hedge fund background. And myself, I've been in VC for about 8 years now, been looking at mobile beforehand, and then been focused on cryptocurrencies for the last 4 years. And then the other partner at our firm, Joey Krug, he's actually the founder of Augur, and it's actually one of the first projects to have launched an ICO on Ethereum. So he's extremely technical and extremely operational. And across the 4 funds, we manage about $600 million.
Wow, cool. Very, very good. Jason, how about you? What are you doing? What are you up to?
So I used to work for Fangbushi Capital. Fangbushi Capital was one of Asia's first blockchain VCs based in Shanghai. I started my own fund, Sora Ventures, about 3 months ago. We closed around 30 million USD, and we're now managing over 100 million USD worth of crypto asset. So our model is slightly different in the sense that we have our own foundation. Our team is mostly, we have advisors from one of the top 20 cryptocurrency called Quantum. This is one of our, we have an official partnership with Quantum Foundation where we leverage a lot of existing resources from kind of like the top cryptocurrencies in Asia and use their relationship to help our portfolio companies. And another advisor that we have is a co-founder of Ethereum, Taylor Gehring. More on the technical side, but we also have our own foundation. So we don't actually have a token, but it's a similar use case of a token, and that enables us to work indirectly with kind of the blockchain leaders in the space, and as opposed to having a full-time, associate or a partner working in your fund. It enables us to kind of have this distributed network of blockchain leaders, exchanges, and provide post-management for portfolio companies.
Wow. Okay. Now, gentlemen, I know everybody is dying to ask questions. On behalf of the entire audience here, I'm sure we're all very interested to know, given what happened last week with Mr. Mark Zuckerberg at Facebook, would have blockchain technology, would that have helped him? It's important, right? What do you think?
Yeah, so one of our theses is basically well, I mean, what the blockchain enables is basically financial freedom.
Right.
And also the ability to maintain your own data and have it be sort of, encrypted within a decentralized network that is
Right.
more secure than centralized servers. So, one of the things that we are excited about are companies that are enabling data silos to sort of be eliminated, and with a token being able to incentivize people to contribute data and have that data reside on a blockchain and be
Sure.
encrypted, that could provide a lot more security for
Absolutely.
data, and also, again, a lot more utility of people's data so that they can feel comfortable sharing that data and have that be on a blockchain, and then of course actually, get some of the value of that data instead of, giving their data to centralized parties like
Sure.
Facebook and LinkedIn, and have those guys take all of the value of that data and not give any back to the users themselves.
Absolutely. And the interesting thing is, a couple of weeks ago, I was having discussions with some big corporate saying, Anson, you've got to help us to monetize our data. This week, they want to talk to me about data governance. So it's interesting how a couple of weeks have changed. But Jason, how about the point of view there in terms of blockchain? Can it really help us? Could it help Mark Zuckerberg?
Well, there's two types of a blockchain that we see in our industry. One is called kind of public blockchain, where a lot of times it comes with a token, and those tokens are listed on exchanges. And then we're in the Mark Zuckerberg use case, we're probably more be suitable in a private blockchain, where a lot of times they don't actually have the token.
Yeah.
The problem with that is our industry has always been quite new, and even though there has been a lot of hype of using tokens and doing ICO, realistically, that's more on the finance side. That's more on the token side. Blockchain technology, especially on the enterprise side, has been relatively, I think, early, especially covering securities and privacy. So I'll give you an example, which is if you want to have very high security and privacy encryption, then you lose that kind of efficiency where you usually find in a centralized entity or a organization. And this is the same for a lot of what we see. If you want to scale your project, then a lot of times companies use off-chain, which means that they don't use a blockchain.
Right.
And it's more of a hybrid model, but they're able to perform better, scale better, and then it will be more of a centralized plus the centralized model.
Good point. Now, I think another question I want to ask you two gentlemen is, older guys like me and Napoleon, my good buddy, we're quite cynical. Obviously we're old, but we are very cynical about this new technology. Is it all hype? Paul? Good question there, Napoleon.
I mean,
beating you.
I say right now it is, it is a lot of hype. If you take a look at, Dapboard, which is a website that, gives you stats on, which decentralized applications are being used. I mean, I think there's only 38 that actually have at least one user. So it's still, so it's still really, really early. Though some of the, there's obviously some that have thousands and tens of thousands. But again, like there's still a long tail, and it's still only 38. So a lot of this is it's speculation. Speculation on future values, speculation on future disruption. So until we can actually have products that have traction that meet some of these expectations, it is a lot of hype right now.
Because the challenge we have, of course, in the big global accounting firms and advisory firms is we are getting emails every minute of every day talking about this new amazing, there's a new company that turns up with the new cryptocurrency, new company talking about blockchain. We've actually now, in fact, we no longer employ old people like me. We now have young teams of PhDs focused on blockchain, looking at ICOs, looking at all these exciting things like AI machine learning. But even some of my younger colleagues tell me there's a lot of hype. Jason?
Well, I think it's all based on relativity, right? It's,
right.
If if you look at the industry trend, we'll start, blockchain start off with Bitcoin and Bitcoin equity investment 2012, and then around 2015 as blockchain equity investment, and then 2016, 2017 has been kind of the start of ICO infrastructure investments. I think if you moving forward, I think you're going to see a lot more of decentralized applications, where we're even starting to see traditional businesses trying to add token models into their existing business in order to grow that network effect. So although I think right now people say there's a lot of hype, I think moving forward there's going to be a lot more. And I think the next step would be just a bunch of Fortune 500 companies, Series A, moving forward. All those companies, tech companies, will try to implement blockchain.
And I think that's very true, isn't it? I think there's a lot of hype. There's a lot of there's a lot of hype about all these emerging startups that are coming with all the blockchain technologies. The moment that Google and all of the other big players come along, I think that's going to be good news. But again, just talking about blockchain, you move between China and the US. Any particular view on the China market versus, of course, the US market, because there are some minor details like regulations?
Yeah, so this is actually a perfect sort of mixture right here, because he's based in China, and he's actually my source of a lot of deal flow in China, and in terms of insights on what's going on in terms of different jurisdictions, and obviously I'm in the US, so I'm very familiar with what's going on over there. And so I'll talk a little bit more about the US and maybe even just some of my views on China, but I think he'll be better suited to tell you more about China. My view on China is, it seems like, well, everything is kind of moved offshore away from China, even though there might be teams that are development teams based in China. A lot of the movements over to Japan or Singapore, and there's still a retail market in Asia, and that's still a very significant part of a lot of these sales right now. So a lot of the companies in the US are going over to Asia and doing road shows, basically going to all of these different geographies and doing meetups and connecting with exchanges and connecting with investors. Exchange is extremely important because at the end of the day, I mean, if you want to get your tokens in the hands of more users and get liquidity, those guys are your gatekeepers. In the US right now, the SEC has taken sort of an educational approach and approach of policing instead of actually creating a guideline or a framework. They pointed out obvious sales that have been doing the wrong things, but they haven't really said, hey, this is exactly what you need to do to be compliant and not a security, et cetera. So a lot of the sales right now, they are kind of making sure that all their legal documents are in order. Some of them are even taking an extra step and registering their tokens as security, either one of the types of securities, Regulation D, Regulation A, et cetera. And a lot of them, and probably all of them now, are not doing public sales. They're selling only to credit investors, either directly or through platforms that can do KYC on potential investors. And so it's really private in the US, retail in Asia.
Yeah. Jason, how about your views? Are things going to change in China anytime soon?
The thing about Chinese blockchain community is the investment strategy is almost opposite of the US. For example, in the US nowadays, a lot of the companies are trying to vest their investor for over 12 months. And that's mostly to comply with securities laws, because they're thinking that, okay, one day my token will become a security. Whereas in China, a lot of the investors don't like this model. They usually want to be vested partially. That's the kind of the maximum they can risk appetite. Or if not, then usually they can exit within the first week, and it becomes more of a dumping game, where you try to get the tokens as ASAP and then dump it on the exchange, and you usually make pretty good returns because there's the pre-sale and then the exchange, right? And then from the Chinese side, Chinese law is still relatively new compared to US. US a lot of times is based on case law, whereas China has a more dynamic feel to it. And I think the threshold is actually more of as long as the Chinese people or the common people do not get affected or do not lose money, or they don't lose their family, then usually that's actually fine. We've even seen some really popular tokens in China that run SAFT.
Yeah.
SAFT is it's kind of like a agreement that's based on the U.S. security law. So you're thinking why would you use a SAFT in Chinese jurisdiction? But these are kind of the things we're seeing in China, and it just comes to show that realistically things are just not as legit. But that's okay because the legal jurisdiction of this environment is more dynamic.
Right. Now, just on that blockchain innovation, are you excited? I personally think that blockchain is not going to revolutionize just the financial systems, but there's a lot of other industry sectors that it's going to impact. Interestingly enough, yesterday I was talking to a young company, a startup here in Hong Kong, doing VR production. They're doing AR, VR production. They've developed a blockchain game using tokens from Ethereum, and it's pretty amazing. I'm excited about the fact that we're going to see a lot of blockchain usages across different industry sectors. But if we just go back to financial services for a moment, Moody's came out earlier this week and said that blockchain has the ability to disrupt the big, the traditional banking systems like the Swiss. What's your view on that, Paul?
Yeah, so we've invested in, we have a VC fund and a hedge fund. So, on the VC side, we've invested all across different verticals on the enterprise and even, things that can, help and disrupt financial institutions. It's just gonna, there are a lot of different use cases on the financial institution side. It's just gonna take a long time. I think it's gonna take the longest time to affect, some parts of the bank, just because,
Right.
again, a lot of jobs are gonna be affected and banks move really slow. I think on the enterprise side, we're seeing a lot more movement.
Right.
Supply chain, trade finance, certain use cases, you don't have to, really rip out something. It can actually just be bolted on top of the existing infrastructure, and, smart contracts can be used more for escrow, for payments, things like that. So I think that's where we're going to, outside of consumer use cases and tokens, I think enterprise is going to come first. Financial institutions and banks are going to come a lot later.
Okay, good point. In agreement. Jason, any final comments, any thoughts? Are you excited about blockchain?
Yeah, that's the only thing we invest in.
That's the only thing you invest in. So obviously you're very excited about blockchain.
Yes, for sure. Yeah.
For sure. Now, are you going to stick around later on? We've still got a couple of panels to go, but will people be able to come and have a chat with you during the cocktail reception?
Yeah, we'll be around.
We'll be around. Ladies and gentlemen, please thank my distinguished panel members, much younger than myself, of course, Paul and Jason. And a couple of very quick points. Now, just a very quick point here. KPMG just launched our new FinTech Game Changer report with Cyberport last week, so check it out.